All right, still watching ET now. Bajaj Electrical numbers have come out. Extremely good set of numbers. EBITDA is over 100 crore versus 24 crore, and there's a very sharp margin expansion as well. Mr. Bajaj, Mr. Shekhar Bajaj is here to talk more about that. Mr. Bajaj, thanks very much. We were getting a sense that companies such as yours were doing well on ground because demand is buoyant. But to the extent of such sharp improvement in your numbers, talk to us about this strong recovery and how it has got reflected in your numbers and other initiatives of efficiencies which you may have got in your company yourself in the last couple of months.
Firstly, I think the results have been extremely good. From a 4.7%, our consumer business has gone up to 10.8%, which is a huge 6% improvement in EBIT margin, which is of course very good. But I must clarify to our viewers that this is not a sustainable type of margins. This is something which has happened because there are many things which were not done in this second quarter, which we will do it, like for example in terms of publicity, advertising cost, which we said that because there was a supply issue, there was not sufficient material, so we had postponed our advertising, which was already started in October. So therefore, the margins will get impacted because of that. Second is that there are many of our vendors and all where we delayed we said that we will not be able to pay you on time, and it was mutually agreed. So that has improved our margins. The other thing which is happening is the costs are going up. Aluminum pricing has gone up. Other things are going up. So margins, it is. I don't think at this moment there will be a possibility of price revision again. And therefore, to that extent, some margin may get impacted. Of course, it will be better than last year. Last year we ended up, so it will be still anything between 6 and 7% is the sustainable type of margin that we have committed earlier also, that will improve by 1% per year. And that 1% per year is something which may go up a little more, but it is nowhere going to be around 10% or 11%, which has happened in the second quarter. The good news is that we have from a minus 50%, which we were there in terms of top line in the first quarter, we are now at and the half yearly we are at minus 20%. We are hoping by December, January, we should catch up with last year. That means in 10 months, we should be equal to the last year's 10 months. And then the last 2 months will be
which you've given that 8.5 upwards of margins will not really sustain. 6 to 7% is more sustainable number, which you are working at, because a lot of costs which were absent from this quarter will likely to come back, like advertising costs, etc. And hence, that's very nice of you to really calm down the market expectation and your margins. The market is keen to know from you what is the trajectory of growth looking next 3-4 quarters far out. The way tier 2, tier 3 has rebound, consumer demand is buoyant. Surely your costs are actually going higher. But if you could give us some ballpark number of top line growth or profitability growth which you are targeting. Margins you've already told us 6 to 7%. But 3-4 quarters far out, if things remain,
August, it was not a supply issue. July, August was not a supply issue. It was more to catch up with the sales. But from September onward, that means September, October, because of the demand being so high, now the coming months also, we think the demand will continue to be strong. It is going to be the availability of supplies for some of the critical items because of the home people who are stuck at home. The demand for items like mixer grinder or for water heaters or for OTGs and all is so high that if we can get the supplies, we can easily increase our sale by another 10 or 15, 20% also. That is the type of demand. So we are not expecting the demand to not be, the double digit is easily going to be sustainable for the remaining 5 months. There's no problem.
Right. All right. Mr. Bajaj, one last word on what are the strategic targets you've set for yourself, for the company, of course, going forward. in terms of efficiencies, in terms of costs, in terms of scale up geographies, new categories?
Correct. See, we are realizing that actually this lockdowns and all have really made us rethink the whole strategy and our working. And therefore, we realized that earlier we could not even think of anybody working from home. We said this is not practical. But this time when we are forced to do it, we realized that it is not that bad. And many of the cases, the work from home has been almost 80-90%, in some cases even 110% of their normal output. So therefore, a lot of that will take place. In terms of traveling also, whether you need so much of traveling, that also is a question mark. We are also looking at the whole area of logistics. We realize that logistics is a very expensive cost, and therefore can we reduce it? So, and of course, now with digital, online, we've had a substantial growth in online in the month of first quarter also, and second quarter also, and also October has been very strong. So the future of online is also going to be very, very strong. And therefore, that is where our focus is going to continue. We have to have a good balance of online with the trade, because as far as trade is concerned, the gap between online and trade has to be very nominal. If the gap becomes more, then people in the trade will get demoralized. So therefore, to that extent, we think that we have kept a good balance between the two. So therefore, trade is also growing well, and our e-commerce is also going well.
Right. All right, Mr. Bajaj, on that optimistic yet cautious note, I'll let you go. Thank you so much for your time. Have a great festive season on sales front at your company. Look forward to chatting with you once again in coming days. Bye-bye.
Bye-bye.
With that, it's a wrap on the show. Thanks very much for watching.